Okay, so back to making some videos. The first one on XBT USD on BitMEX. And before I'm gonna go into some analysis, I'm gonna point out something really quick regarding volume-wise, which I've included a lot in the past, but just to give along with any new people watching this video, before I'm gonna get into anything, I'm using the BitMEX chart, and it's conquered its piece of the pie volume-wise right now, but was not always popular or unknown before all the shilling happened and stuff. There was pretty low, real low volume on BitMEX itself. So regardless, for the point I'm trying to make, it doesn't matter. Point I'm gonna make is note the volume attached on the run-up in 2017, and you can pretty much compare this to any of the top volume exchanges back in the days. Point I'm making is you've got the volume attached to the top of a bull run, parabolic advance. We see a correction happening, right? And I'm gonna do this real quick right here. So, and you've got your triangle consolidation after having this zigzag correction, right? So what I pointed out before is just note all this volume right here and compare it to the top, right? Then again, note at what happened after we broke down. The volume just completely vanishes. The volume itself even made a rounded bottom, so to speak, if you can see it. So what ended up happening is the moment we broke our previous broken supports, we pierced through our current resistance. Look at the volume that showed up. And not only on BitMEX again, compare it on all the exchanges, and compare it to 2017, the top of the bull run. So what does this tell me? It tells me before, when I saw this volume right here and right here, right here, doesn't matter, when I saw all this volume across the board, I knew for one, high likely there will be all-time highs in the future rather than this dying off to zero. So what ended up happening when we broke the previous support that's been broken, so when we broke the previous resistance again and we saw the spike up again, that's again confirmation, especially when we see another breach of the highs afterwards and another significant spike that's just massive on top of it. So whether this goes up or down, it doesn't matter. New all-time highs are far more likely than new lows, in my opinion. So could it mean that it's impossible that Bitcoin retraces back to 3,000? No, it is not impossible. I'm just talking about odds right here. And the odds are telling me that it is far more likely that we see all-time highs in the future. Whether we break up or down from here doesn't matter, just talking about the big picture. So why have I repeated myself today? Because the last time I pointed this out was our unbalanced volume indicator, which I use because the momentum oscillators, they do not account for any volume, and the most important part of an analysis, in my opinion, is price action and volume. So I pretty much always use an OBV, even if it's not on charts I post. I have looked at it. I just sometimes take it away just because the screen can become overwhelming, so to speak, right? So what is notably right here, I'm going to show you right now. Look, where our OBV is currently at, and note the peak of the 2017 bull run, just as a comparison. And if we end up breaking upwards here, there's a case to be made that there's not going to be any lower prices seen right now. So I'm not saying it's going to happen. I'm saying I will act on confirmation, but I'm just pointing out the potential odds in the future right here. So OBV has tended to work for me quite well, and really quite well, as I've really kind of like all of the shorts I took inside the triangle, the OBV was always pointing it out up front, the weakness. Or not always, but just as an addition to the analysis, it's really helpful in my opinion. So I'm taking this into consideration for the future. So remove all the drawing tools. Something else to be notable is we broke bear out of our multi-month consolidation pattern, right? And our RSI just went completely oversold, while price is significantly higher since last time entering this region. Just small pieces of the puzzle. So going on a monthly, and on a monthly chart, in my opinion, with the Magnon, the three most relevant support resistances from a monthly are these three right here. So I'm going to explain this from the standpoint of the last set long we opened. So let me just quickly redraw this. So going to the case in just a second, right? So something I did not point out before is there's a potential scenario to be made that you have a bear break and it ends up being a fake out. So yeah, same could happen. Same could happen here. Who knows? More important is you have a multi-month consolidation pattern after a huge run-up of more than 300%. So whenever you have a breakdown, and I'm talking about this, it's like just a little less than 20. Look, it's 18% in one day. Ended up being more than a 20% drop. So whenever you see stuff like this happen, zoom the fuck out. Zoom the fuck out. Because the only reason why it will stop dropping is the moment the buyers exceed the sellers. And the buyers are not going to exceed the sellers on the hand of 4-hour charts or 1-hour charts or daily charts or whatever. The big money that moves the markets, that holds the markets or makes them rally, it uses weeklies and monthlies. So is it possible to pivot on a daily? Sure it is. Is it possible to pivot on a 4-hour? Surely it is. Is it likely? Fuck no. It's not likely. When you have a big bear break on a pattern, especially one that everyone is watching, you always want to zoom out and mark the monthlies and the weeklies. So after we have this break, we actually have not two but three confirmations. So usually I'm gonna put this right here. I'm gonna make a little sketch. So usually what ends up happening is wait, what's wrong? Okay, this is weird. That was weird. Never had that before. Anyway, So what usually tends to happen is you'll get this huge steep drop down, and usually on a 4 hour. So now we kind of bounce before hitting it, but usually from my experience, it either rates it and the buyer step in, or it just reacts pinpoint on it, or just a few bucks before because everyone's front running it. So the bounce usually happens, and just like on a 4 hour, for example, or on the daily same point, right? You got this bounce up, then you get another wamble down, and then the second point does not reach as far as the first one. So that's your kind of your confirmation of, okay, buyers were stepping in here, and price did not reach as low here. So the buyers, sorry for my English sometimes, the buyers gain strength, higher probability of testing upside as next micro move, rather than more downside testing, again, micro move. So um, why long here? Because the next micro move was, as I've seen before right here, is like the range high, it gets tested or it gets rated. So everyone who's going blindly short, people are only seeing this, even right now. So you got a big bear up, you uh, you've got your breakdown, and then you've got the consolidation, and you're flagging. So people are expecting this to go down again. So when are you gonna short it? You're not gonna fucking short it when it hits a monthly support after it drops 20%. No, you're gonna wait for the range to establish, and then when the range breaks down, you short. When it retests, you short again. Add on the confirmation, right? Same for if it breaks up. You're gonna long breakout, retest, and then on confirmation add again, right? So why was the next logical stop the rate of the range high? Because we already tested it even 3 times afterwards, and buyers stepping in. But after these two touches, it's enough to be saying, okay, the downside has been tested. We had a 20% drop, and everyone is watching this fucking bear flag right now. So what are they gonna do? They're just gonna take out every shorter who's late to the party, stop them out of their positions. So not only lose on positions, but when it goes back down, they will add momentum because they're out of positions in the short again, right? So it's also usually the people who do it, they get stopped out again, so they see a red bar and they instantly go short again. Wrong, wrong. You got this flag right here. Let me put it green again. So with this happening right now, if you are not in a long since bottom range or in a short since top range, you just gotta fucking sit on the sides and let this resolve itself. So option A, breaks up, means add long on the breakup, add again on the confirmation on the retest of buyers stepping in, and then you can make a case again, long here on the break, add again on the retest, and add again on the break of the previous high before retesting. Same here. If you want to go short, you either short the top of the range or you wait until the range low breaks. You add here on the range low breaking, you add again on the retest, and then potentially again when it takes out the low set again. So it's three steps you can be like layering into a position. build the position, not blindly short a monthly support after a 20% drop because Twitter is saying it's gonna go down. Fucking idiots. Anyway, so what's gonna happen next in this range? I got no clue. I'm holding on to my long. Uh, the first take profit was front running this range high set. So whatever's gonna happen next, micro move within this range, I don't know. I don't give a fuck. I'm interested in playing this when it resolves. So if it's gonna break up, beautiful. Even got some longs from a lower position, partially taking profit up right here. Stops are in profit. If it does not take my stops before going up, then there's extra position. But nonetheless, I'm just playing both ways, right? Either way, this resolves is fine by me. Why? Because on this bear break, anticipated on it breaking bearish, even if it broke bullish, it's gonna have this fake out either way. So whenever everyone is watching the same pattern, it's likely that stuff like this happens. And for the same reasoning or stuff, you could just have a dildo do this. So there's no way of saying, and we are not gambling here. So what's best to say is anticipate on what's going to happen rather than just saying I'm taking my positions and this has to happen. It's better to just say to yourself, okay, I'm just gonna let the price action come in and then I'm gonna take a side with whatever part the odds are on. So you can perfectly go long here, add on a retest, and add again on the breakout of the previous high, right? And then it just can dumb down. It's perfectly possible. But if you're gonna do stuff like this 10 times, it's gonna be profitable. If you're gonna be gambling and just randomly shorting because you see a big red bar and you're saying, oh, this is going to fuck, then you're not trading, you're gambling. So to the next one. Something interesting in my opinion. Let me get the fib retracement on it. So interesting to see is, look, the fib extension of our current run-up is just near the all-time high. So what does this tell me? It means sellers are likely going to step in again. So just something for the future. It's probably gonna end up not piercing right through. Odds are very likely because it's a confluence with the 1.618 extension. It's always possible if there's a lot of hype and stuff, but less likely. Let's put it this way. There's like a ton of examples of the last months where it just rejects perfectly. Pinpoint accuracy rejection on 1.618 extension moves when you have a big downtrend, and then you have the first bounce on real volume. The probabilities of people, so just say this happens, right? Just say this happens, and it recovers here. The amount of people that will take profit at the 1.618 extension, it will always push the price down temporarily. The profit taking will always exceed the buying demand, or almost always exceed, unless there's just major media hype and stuff, which there will be indeed at these levels. But just something to take into consideration for the future. Know everything of this has been posted already, but just going from a blank and just scrambling some thoughts, right? So same can be done too for like the maximum breakdown target of the triangle and the maximum breakdown target of the triangle is confluent with the previous monthly support 4,700. So again, a possibility to be keeping into consideration. But does it mean blindly long or blindly short? Whatever, because of sentiment on Twitter and other social media platforms, or because you see a big red or a big green bar? Fuck no, that's not the way to be going, in my opinion. So anyway, I'll be playing this range personally as well. So whatever way we break, I'm gonna be playing as well with the triggers and some alerts, and then add on the retests from every 4 hour. That's giving confirmation. 4 hour and 1 days will be confirmations I use personally. So, as mentioned before, there's a lot of posts about this. I'm not gonna put any into this. Just gonna keep on working on this blank, as everyone who's watching probably just saw the posts. So, actually, let me do it like this. So I was anticipating on something like this: a retest, and then see another test of the range again, but just not going as low as the previous set lows, right? So if this were to occur, then you've got a ton of shorters stepping in here, a ton of people selling, taking profit from all the way up. I'll be doing the same thing probably. For my long-term stack, I'm going to be taking some chips off because the risk increase. So when I'm talking about my long-term stack, it's going to be on a daily, on a weekly confirmation at least. So for now, I'm going to just talk about the bullish scenario, right? And of these, we see these retest, right? Ton of shorters stepping in again. Everyone is shorted here. Everyone who took profit here, stopped out here, blah, blah, blah. They're all going to add. And what's going to happen in the bull case, I think, is it's going to pull back and it's going to form some sort of W with the second V of the W being higher than the left one, confirming the buyers holding support, and from there on break the triangle base again. So that will mean that when price finds acceptance above here, you're gonna have the same ramping effect out of here. So the volume is gonna spike and spike again higher. So I'm talking about the volume here, right? So if this happens, it means I'm pulling every bit that's not filled in the lower sections. The moment we get a weekly close above the triangle support, I'm pulling my bids and I'll be looking for entries or market buys depending on where the price is at given time. So that's the bullish scenario, right? So from a bearish perspective, bear flag, legging, oops, and leg down. So bear flag perspective, bringing it to the previous consolidation of around 5,400. So target may be a little bit overextended, as you still got this triangle support, which I think we will not trade below. Possible, but I think the buyers will step in between the 6K 5,800 and the 6,400 region. I think it is very likely that buyers will step in, and if this scenario presents itself, I think it's gonna be the best potential case to be made to be buying some Bitcoin for the long term. So is it possible to reach there? sure, and it would be a very optimal scenario for adding, very optimal. But myself, I don't got bids there. I just got them. I got higher bids. So for those unfamiliar, I'm layering down the entire set basically. I'm not attempting to catch any bottom. I'm just adding down and front running weeklies and monthlies in order to get filled. So I don't have bid set right here. However, the lowest ones are at the previous triangle support. So that is the bear case to be made. So again, if there is a break right here and you go short, you can catch a move which will likely yield around 10% to the 0.618. And the current buyer stepping in right here, you see with the big wick as well, it will be a 10-20% or likely something in the 25 around the 25% breakdown target from so let's say flat breakdown here. So around 20-25% something will be the high likely target if this breaks down. So if the flag breaks down and there is a big volume spike attached to it. So if there's no volume spike attached to it, I'm still gonna go short. And short the retest, but I'm gonna be wary that it might be a fake out. So I don't know if there's anything left. I think this kind of really concludes it for now. So basically, maybe the one last thing is just repeating quickly. If this breaks down, it's gonna retest. It's gonna have a a shitload of people just shorting it again. If we make this little leg down again, everyone's gonna get so fucking confident, and at that point, this point right here, everyone's gonna say again to short it. And at that point again, it's just gonna pivot. And what happens when they pivot is everyone who went short has to rebuy. Everyone who took profits or stopped out is gonna rebuy. So if everyone is watching this clear triangle and whales want to go long, how the fuck are they gonna go long? Who the fuck is gonna sell it to them at those prices? No one. So what do? They tank it down, bust it right through support, and the moment it busted right through, you've got a shitload of people shorting it. You've got a shitload of people covering, taking profits on long-term backs, securing profits from early consolidation right here. It does not matter from what point or what perspective, everyone's shorting and taking profit or getting stopped out. What happens on a retest, the same occurs again. People who did not take profits and who aren't jackasses that go on green and red candles, they're gonna take profit again. Everyone who shorted it is gonna short it again. So when price eventually does see this retest and a leg down, you're gonna get people get overconfident, and then when it breaks up, there's a big problem because there's only a limited amount of sellers, while everyone who went short needs to rebuy to get out. Everyone who went stopped out, they're gonna rebuy because it's going back up. And it broke the previous resistance, which it broke the previous support, which broken, and it reclaimed it again. So it's just a whole lot of people again at the same time, and they're all going to be looking to close positions and be forced to buy, or they're all going to rebuy stopped out orders, or they would just want to go long because they're not in a short, but they see this reclaim, they want to go long. And the people who are short, they're going to get stopped out by triggers or close manually on daily and weekly confirmations. Anyway, this will lead, if this happens, the bullish scenario, then this leads to just an avalanche of just buy orders, and there's not gonna be enough selling orders to fill it. So you're gonna have this massive dildo up to either, or dildo on a 4 hour or something like, or one day, anywhere from 11K to 12 500, I think this is the move. If we see this W form, so raid into orange, come back down again, and then bust through orange, then it's just gonna go back to 11k3, 11.5, 12.5. It's all possible, but it's gonna be a big move. It's gonna be a big banger if it happens. Big if. So, do I know what's gonna happen? No. Could care less. Just playing how the odds go, right? So, same when I posted the video back here, and I said go long. I'm going long, and I'm taking profit right here. So, am I mad? No. But look, the highest profit point, this was the highest one. There's significant lower ones as well, right? But anywhere from 35 to like 35 to 75% profit unleveraged, without the leverage accounted for, and it ended up going up 300%. So am I mad that I close all my longs? No, I'm not mad because it's probabilities, right? And the probability of the seller stepping in again was much higher than it would just pierce through like butter and just paint a giant, enormous dildo on the board, right? So was I bummed out because it just mooned all the way further and I didn't have a long in anymore? Sure, but am I mad about it? I've got enough spot long term, and you don't gonna catch every bottom and sell every top, right? So the way I look at things is, okay, I'm happy I got an interest here, and I'm happy I made 40 and 75% on the way out. Again, unleveraged. It was a juicy motherfucker for me. But if you're always gonna keep thinking, oh, I missed it and I could have made this much, then maybe trading is not the best thing to be doing if your mindset is like this. Same here. People see a red bar and they're just anticipating on, it's all over. We're gonna have to break down from this bear flag and just return all the way. I'm just saying that keep an open mind and put your money where the odds are. And in the long term, that's profitable. And not because of sentiment changing, news, FUD, your favorite Twitter character going bull or bearish. Just keep your money where the odds are, in my opinion. So close this one and then do some other small